Hi, this is Brian Castle with the FourStar commentary as we enter the fourth quarter of 2015. The economy goes along well here in the United States, and the second quarter economic numbers have been revised upward. We expect the third quarter numbers to be decent, and the economy continues to go along well. We entitle our comments today Goldilocks Redux. There was a time a few years ago when we had a Goldilocks economy, not too hot, not too cold. And we're kind of in that position right now, where the economy is growing. We're seeing strong employment trends and lowering of unemployment. We're seeing rising consumer spending. Housing is growing and actually out of the recession, or depression I would say, of 2007 to 2012. And fundamentals really show no recession in sight. Mergers and acquisitions on the finance side have continued to reach now record levels in 2015. So there's a lot going on in the finance world. The economy is reasonably healthy, not too hot, not too cold. Canada, however, is in recession because of the commodity markets being down. Australia is in a similar position. China is a huge problem, and China was the reason the markets have recessed in the third quarter. And no one's talking about Greece. Greece was a big subject when there was nothing else to talk about, and now there's plenty of other things, presidential politics in China, and now further incursions into Syria and activity militarily. So no one's talking about Greece. This is, however, a very good time to book a trip to somewhere because the currency in the US is strong. Even the Canadian currency is down to 70 cents on the dollar. So in the financial markets, to take it to the next step, financial markets topped out in May and have been declining slowly and then swiftly in the short run since that time. Some are saying there's parallels to the market crash of 1929 with increases in personal debt and margin debt and speculation in China. We'll see whether that's true or not. I think China as a market still has further to fall. Our markets are down 10% roughly from the highs and 9% for the third quarter. September is usually the worst month of the year if you look at financial history, and that played out exactly the same as it had in the past. But October seems to be the month that gets the headlines with most of the big crashes happening in October. Hopefully that's not the case, and that remains to be seen. So our posture for these markets is certainly to be cautious in any declining market like this. Right now, all of our portfolios have raised some cash to protect value. It's most important for investors to not lose money in a bad market. It's actually more important than making good money in a good market is to not lose money in a bad market. We have numerous models that raise money in a bad market and raise cash. They rotate out of stocks and out of investments into cash. We call those our dynamic models. I have a sheet here that shows the different cash levels of all the models. We have one that's 100% cash, and others are 50, 66% cash in various amounts. The idea is, at some point when the markets are rising again, we'll take that cash and invest it, but in the meantime we want to avoid bad events. If the markets were to go significantly lower from here, then those portfolios would be more protected. We're not predicting. We're just saying we don't know where the market's going to go, but for those who want the protection, the dynamic portfolios certainly do that. So this is a time of caution, and all our portfolios are on high alert, and we hope that that is wrong. No one wants markets to go down. And lastly, thanks and congratulations to our friends at AeroShares, one of the mutual fund families we work with, that listed the QVM shares on the New York Stock Exchange and invited FourStar Wealth Advisors to participate in the bell ringing ceremony at the New York, which we did on September 15th. So we'll be back with a review of 2016. Those are our comments for the fourth quarter.